So Mkango is a dual-listed company listed on the TSXV and AIM. We are developing a rare earths project in Malawi, a separation plant in Poland, and then we have an investment in a recycling business based in the UK. So mining, refining, and recycling.
Brilliant. How are you, Will? Long time no speak.
I'm very well, thanks, Matthew. Yeah, it has been a while.
Yeah, I think we spoke actually about up in London face to face. That seems a novelty these days. October 2019, when things were a little bit quieter in the rare earth space, but I think slightly buoyed by political tensions around mineral security and rare earth prices not helping as well. So, in fact, you know what would be great? Why don't you kind of lay out the business plan for people? Because it's been a while. What did you guys set out to do? Because I noticed you put a few things together since we last spoke, and that might kind of set the scene and allow us to have a more useful conversation.
Sure. So we, Mkango, we listed in January 2011 on TSXv, and we'd secured a rare earths project in Malawi. Malawi has long been known as a rare earths mineral province. I mean, the Japanese government were completing exploration there in the late 80s together with the Malawi Geological Survey. And at that time, a project called Songwe was drilled, and there's about 2,000 meters drilled to about 50 meters, so barely scratched the surface. So we had been operating in Malawi in 2011, 2010, and 2009, and at that time we had been focused on various commodities, but rare earths really started to come of interest. We were in Malawi, right place, right time. We reviewed this project and we saw there's a huge amount of upside. So really that was the start of Mkango. We listed on TSXV with support of Canadian investors and UK investors. And we completed a large amount of drilling, a resource in 2012, pre-feasibility study in 2015. And then we had a strategic partner, Talaxis, who came in. We listed in London, and that really moved us to the next level in that we completed another major drilling program. And I think in completing that pre-feasibility study, we saw there are opportunities to improve the project. So we completed a lot of work on the processing flow sheet. We expanded the resource substantially. We proved up a measured resource. And then we began to see there was an opportunity downstream, and really with the objective of increasing marketing flexibility and also adding value to the product, and that really started us on a journey looking at potential sites for a separation plant. So we looked at the UK, we looked at other sites in the EU, other jurisdictions, and as a result, we recently signed a lease option agreement on a site next to a major chemicals plant in Poland, owned by Grupa Azoty Puławy, second largest producer of nitrogen fertilizers in the EU, and major chemicals company in Poland. So that really is the mining and the refining. In parallel with that, we started working with a group called HyProMag. Our belief is that as a resources company and going forward, there should be a recycling element to the business. I mean, rather than just digging it out of the ground, refining it, selling it, and then ultimately that product or that at end of life, that product, that rare earth magnet ending up in landfill. We should be looking at recycling that material. And I feel that I think that in the mining sector generally, that's going to become a major part of groups' business plans. So, I mean, you see it in the PGM industry, 25% of PGM production is recycled, and in the rare earth sector is less than 5%. So recycling is a very core part of our strategy. And I think those three elements, the mining, refining, and recycling, and all the synergies between those businesses really sets us apart from the peer group. And to my knowledge, there's no one else doing it really outside China.
Well, there are a few people, because we've had them on the show. It's a question of, how do you insert yourself into the various ecosystems which are building up there. I mean, you guys, for a long period, rare earths was not flavor of the month. It was seen as sort of complicated, difficult investment because of the volatility of pricing around rare earths. Can you talk to me about why you think you need to do this kind of end-to-end solution? Because the mining bit is hard enough, but you've kind of got a processing pilot plant which you've actually been using. Well, tell us a little bit about where you're at with that.
Yeah, so in terms of the project in Malawi, as I say, we already completed a pre-feasibility study, and that with rare earths, it's a lot of the value add is in the processing. So the mining side of things is straightforward. I mean, for example, we'll use a contract miner. So you've got to have the geology in place. You've got to have the resource, which we have. The processing side of things is really where you add value, and many rare earth projects, most rare earth projects need a bespoke processing flow sheet. So it does take time to develop that. That's why there are so few advanced stage rare earth projects. So we looked at the pre-feasibility study, and we saw an opportunity to increase recoveries and grade in the flotation flow sheet. We saw an opportunity in the hydrometallurgy to make the process more efficient. And so we spent a lot of time focused on that, and the culmination of that is the flotation pilot plant we've recently undertook, which is very successful, and the hydrometallurgy piloting that we're doing at the moment. And what it comes down to is really in the pre-feasibility study, Songwe, the mineralogy is very well understood. I mean, we've had 3 PhDs on this project already. A lot of work working with sort of Campbell School of Mines, looking at the project. So it's very well understood, and there's two rare earth minerals. Most of the rare earths are in one mineral called sintersite, conventional mineral. It's a fluorocarbonate mineral, so similar to what is being mined at Mountain Pass in the US. The other mineral, apatite, contains a small amount of rare earths. In the pre-feasibility study, our strategy was to process and leach both of those minerals to maximize recovery. But then we went back and we looked at it, and to get the last 5% of those rare earths in the apatite, you need a lot more acid, and you need a lower pH, which means more impurities into solution, which means more complexity for the purification. Now what we're doing, we're focusing on processing one mineral, so you can selectively process it. It contains 95% of the rare earths. It makes things a lot more straightforward, and will unlock a lot of value. So we developed the flotation flow sheet to focus on that one particular mineral. I mean, we've achieved grades of 30% or more, but there's a trade-off between recovery and concentrate grade. So the recoveries we achieved, we not only increased the concentrate grade, flotation concentrate, we also increased the recoveries as well from 67 to 74%. So again, big improvement in flotation recoveries. What that means is the bigger resource underpins doubling of the production rate, doubling of the mill, the ore going into the mill. But the higher concentrate grade means that we'll actually be, even with doubling the mill throughput, we'll be putting less tons of higher grade material containing more rare earths into the sort of hydrometallurgy and the leaching circuit, which means a much more efficient circuit. and that'll offset the increase in capex from the bigger mill, lower capex with the hydrometallurgy plant. So it's quite a long-winded explanation of what we spent a lot of time doing, but it's certainly been worthwhile.
So most of the people that we speak to in the rare earth side of things, they sort of attribute all the skills necessary to actually do processing and separation to China. They've had 40 years of it. Not many people with the relevant experience or skills outside of China who've done that, and that puts them off. So they don't bother. They just accept at some point they're going to go into the Chinese ecosystem for one reason or another, and that may affect their ability to make margin. You've decided, no, I think we can do this. We're going to have a go, and it's going to be economical. It's going to be economic for us to do so. What led you to believe that you would be able to crack the code, as it were?
So we went through an extended process to see, because there's no point in going downstream into separation unless you can compete with China, and you can compete with the existing separation capacity that's out there. So our key objective in looking at a strategy to go downstream to separation is to identify the best site from an operating cost perspective. If we hadn't been successful in doing that, we may well have had a different strategy. However, we believe we've found a very competitive site, and from an operating cost perspective, and that's for a number of reasons. First of all, the infrastructure is there. There's a railway line, there's a road network. We're in the EU, so it's very well developed. Poland is sort of at the center of battery development. The whole part of Poland is going through a green transition as well. You're seeing battery manufacturers locating there. Johnson Matthey just announced they're building a plant there using renewables. So there's an opportunity to be part of that transition. But the infrastructure is very good. We have the rail and the road. There's a power network. There is a railway line on site. The technology we're using generally has lower operating costs than the other sort of conventional technology, which is a chloride technology. So this uses nitric acid, and basically it uses nitric acid, ammonia, and there's an ammonium nitrate byproduct, which is basically a fertilizer. Hence, working with a fertilizer company. So what I like about this technology, it's not only lower cost, it's also more circular as well. So you have nitric acid and ammonia going in, and the sort of nitrogen that comes out as ammonium nitrate, which goes back into the system. So there is sort of circularity there. Also, with the chloride technology, a greater proportion of the costs are in hydrochloric acid and caustic soda, which you would need to buy from a third-party producer who may be, those reagents use a lot of energy, a lot of stable power. They need stable power, and they need a lot of it to produce it. And you're not in control of that energy source. So with a nitric acid route, a greater proportion of the cost is energy, and we will have much greater control of how what we can do, how we can supply that energy. For example, we'll look at solar as part of the development. So really, the cost position comes down to the infrastructure, fantastic and infrastructure in the region, and the technology. So this nitric acid technology, we are working. It's a conventional technology. It's proven. There were a couple of, and there's a separation plant in La Rochelle owned by Solvay, which used to run that process. There's another nitric acid technology plant run by Silmet. So it is a proven conventional technology. we are working with a group called Carister, who have, I'd say, there's probably no one else outside China with the sort of breadth of experience they have with separation technologies, covering not only the chloride route, but also nitric acid route. So they were the team running the La Rochelle separation plant for Solvay, and they've got experience running separation plants at industrial scale, and there's very few groups out there like that. We've also for the last few years, our sort of chief technical advisor, Mike Vasey, he was with Linus Corporation for 15 years. So he was VP Research and Development with Linus Corporation. Again, one of the only major integrated rare earths company outside China. So I think we've got a great team, and we're working closely with Carister not only on the feasibility studies which are underway, but also they'll be working with us during construction and scale-up production as well.
Right. Okay. So I'm going to park recycling to one side, if I may, because it's the other side of the line. With regards to the resource, I see that between 2011 and 2019, you've significantly increased the resource, which is all good news. You have, the pilot phase is underway here, and you're going to be able to talk to us more about the economics as you understand the recoveries on the concentrate side of things. But what I notice is you're using a lot of partners. That seems to be the model you're employing. Bring in the people with the relevant skill sets to help you deliver. Lovely. But at some point, you're also going to have to come up with some capital to build these things. The processing component is not going to be cheap. So, can we expect to see more of the same in terms of partnering with named companies, not just technically, but in terms of the shared costs of building this thing out?
Yes, and I think we've as Mkango, we've always been focused on developing partnerships in the sector, and we see that as a very good way of progressing the projects. So I think we have Talaxis who invested in the project in Malawi, and they invested £12 million for a 49% interest. We, subsequent to that transaction, we've obviously very recently announced the separation plant in Poland. And, we're seeing a lot of strategic interest in, the package as a whole, and individually, and in the recycling as well. So I think we are looking at ways we can unlock the value, and we're discussing with our existing partners and new partners as in terms of how we move the project to the next level. In terms of capex, in Malawi, this is a modest capex project, and I think that's always been a focus for even before we announced the pre-feasibility study. The number we always had in mind was around 200 million capex. For the size of the market, rare earths is not a huge market at the moment. I mean, it's got very significant growth potential, electric vehicles, wind power, but it's a fairly small market. So you do not want to be going out with a capex number of $500 $1 billion. So modest scale capex, we've always been targeting a modest scale capex number, and keeping operating costs as low as possible. And we're still targeting a modest scale capex number, and around 250 million for double the throughput is what we're targeting. Now, clearly, it's subject to the feasibility studies that are ongoing. Senet, the lead engineer, are doing that work at the moment in South Africa, but that's the sort of number we're looking at. But with
Mm-hmm.
opportunities to expand downstream as well.
Right, and with Talaxis, are they going to like follow their money? They're sitting with 49% of Songwe at the moment. There will be further equity required. Will they continue to invest?
So the structure of the transaction with Talaxis is, on completion of the feasibility study, they have an option to invest that equity and arrange the project finance. So say the capex says 250 million and you have 60-40 debt equity split, then that equity, whatever that is, 40 million, 100 million plus, would need to go in as equity to exercise that option. So clearly that incentivizes us to ensure that we have an extremely competitive feasibility study. So
they would then, if they do that, they'll have 75% of the project, but you've got free carry on the remaining 25%. Okay, so that's good. So we'll park that up. So you just need to deliver it technically in terms of the result and the feasibility study. With regards to, they've also taken a 24.5% interest in the recycling component. Is there, what are the terms there?
The terms are they have a 24.5% interest. There's no option there to increase their interest. So we and Maginito is really, we set that up to look at these downstream opportunities, and really that has become the focus. There has become on the recycling, and it's a very interesting opportunity, Maginito, because not only does it have the interest in HyProMag, has the 25% interest to go higher to 49%. It also has carve out of offtake rights from Songwe, so it has access to primary offtake from Songwe, and it also has offtake rights from HyProMag as well for recycled material, and we have the right to supply primary material to HyProMag for blending. So again, as I mentioned before, we are in a unique position because no one else really has the ability to market and sell both primary and secondary recycled rare earths. And so we're in a unique position outside China. We have the IP to do that recycling with hydrogen, and no one else has that IP. So, and that really unlocks the supply chain. And that product can go into a whole range of different markets.
Okay, so what you're saying at the moment, with the mining and the processing component, you can sit entirely outside of the Chinese ecosystem. You don't need any skill sets, don't need any money, and you're not selling into the Chinese market. Is that what you're saying?
That's correct. Yeah.
So in Talaxis will take care of the marketing, will they, in terms of product?
So in terms of that option, so Talaxis, if Talaxis exercises that option to go to 75%, then Talaxis is entitled to that offtake, subject to any offtake that Maginito carves out for downstream developments.
Right. Okay. So you're deliberately choosing to start with a lower capex project because it's difficult to get the larger capex funded in this current market, but the market, as you said, the demand is absolutely there. Coming out of EV, or you've mentioned wind turbines as well, you're comfortable with the ability to kind of sell into a high demand market.
I think really our strategy is, as I mentioned before, modest scale. It's not a huge market at the moment, so. We're starting off fairly modest scale, and the same applies with the recycling as well. And then to grow with the market, but it's also marketing flexibility. The further downstream you go, the more marketing flexibility you have. So, producing just a mixed rare earth carbonate, your flexibility is fairly limited. With the separation plant, we would be in a position to produce separated NdPr oxide, neodymium oxide, praseodymium oxide. We would also produce around 50 tons a year of dysprosium and terbium heavy rare earths in a mixed rare earth carbonate and SEGH carbonate. That also sort of differentiates the company. Songwe is quite unusual versus other carbonatites in that it contains greater proportions of heavy rare earths than you would normally find in a carbonatite. It's not a heavy rare earth deposit. It's a light rare earth deposit, but it's a sort of sweetener of heavy rare earths, which actually constitute quite a significant part of the value. It's probably around 20% of the value. It's also highly strategic, and so we'll produce that product, and we're looking at options as to what we can do with that heavy rare earth carbonate outside China as well. So there can be some very interesting opportunities that come out of that, and may enable us to go even further downstream into heavy rare earths. On the recycling, run by a fantastic team who have run businesses before in the rare earth sector, in industry, long track record in magnetic materials. The strategy there is we'll be producing samples for customers this year. We've had a lot of interest with some of the publicity we've been getting, and the profile of the company is really growing. And I think certainly people are beginning to realize that recycling is going to play a very, very significant role as a complementing the mining sector. It's not going to replace it. I think it's going to complement it. So we've had a lot of interest from end users who are looking to increase their recycled proportion of their components, so we'll produce samples this year, and then next year we're looking to scale up to around 30 tons a year of neodymium iron boron magnetic material products. Some of that would be sintered magnets, and some of that would be a variety of other different products.
So just I agree with you on the recycling. It's going to become more and more important, but you're going to have to, one, demonstrate your ability on the recovery side of things, but two, also get the feedstock in at prices which make sense for you. And I think you're aligning yourself to the European ecosystem here. So where's all this feedstock coming from? When do you have to start having those conversations? And there is competition. I think you're using a hydrometallurgical process, but there's the pyrometallurgical process as well, which is reasonably well established. And how do you compete in what's going to be a very busy market in Europe?
Yeah. So what's extremely advantageous about this process is if you have a rare earth magnet embedded in a component, how do you get that out? Obviously, it's magnetic. You could use heat, and I think you mentioned the pyrometallurgical process to do that. But clearly, if you're using heat to demagnetize something and try and extract that magnet, you still have to physically get the magnet out. You may use heat to demagnetize it, but you're also putting in a lot of energy to do that. And do you really, if you're trying to minimize your energy input, do you really want to be roasting that component, that magnet, to demagnetize it? Hydrogen is it's a very interesting. The hydrogen technology is very interesting, and it is an established technology in magnet making. So I think the paper first published on this was in the 80s by Professor Rex Harris from Birmingham University, who's one of the founding directors of HyProMag. So it was first published in Birmingham using hydrogen generally in magnet making. Now it's used everywhere, in China, everywhere. So That aspect was never patented. What Birmingham University and the team there, the IP that they have is using, and the know-how is using hydrogen to extract the rare earth magnet. So it's that sort of hydrogen tetraplocation process and the demagnetization, forming a powder that enables the magnet to be extracted. So that's really that's really where it's a major opportunity, and I see it. It really unlocks the whole supply chain for recycling, because it enables you to get the magnet out of the component and demagnetize it into a form where you can either remake a magnet, or you can you can produce a bonded magnet or some other rare earth powder. You can process the raw powder. If it's not suitable for short loop magnet recycling, you can chemically process it.
But where's the scale come from? That's what I'm asking. It's like, where's the feedstock come from? When do you start to understand your ability around economics and so forth?
Well, I mean, the starting point is, the starting point is electronic waste and hard disk drives, speakers. So the starting point has been those sort of components that are segregated in any case as part of the recycling process. And, we're working, HyProMag are working with recycling companies as part of these grant-funded projects. So that's initially that's the sort of waste that's just coming. But we're also starting to see sort of end-of-life wind turbine magnets coming available. And so we're starting to see that as an opportunity, because those first generation of wind turbines, that material is starting to come available. So that is something we're looking at very closely. And in the future, as the EV sort of revolution really takes off, because it's really just starting, and as that takes off, I think that'll be a source. That's a longer term source. So whether it's the ancillary motors or the drive motors, clearly it's a sort of a big sort of growth area. I mean, HyProMag are already partnered in a sort of grant funded project with Bentley Motors, part of the VW group. So there is interest in that sector, in this technology, because it's going to become part of the industrial ecosystem recycling. So
it's also going to become very, very competitive. But there are new entrants coming in. They need to establish their technologies and the processes and flow sheets that they use. But everyone in the chain is going to want to take their piece. At the moment, I suspect automotive companies are, they just want to be able to do it for marketing terms. They want to be able to say they're recycling, but at some point they're going to start charging for their feed through to some intermediary who's then going to take their cut and feed onto companies like yourself, who are then going to have to work out where the margin, how much margin they're willing to give away in terms of their competitive tendering process. So it will become I guess difficult to make money if there's lots of entrants. So how do you insert yourself with long-term contracts, and how do you get scale to this thing?
Well, I think in terms of new entrants, as I say, no one has access to the technology is licensed from University of Birmingham. It's a patented technology. And, the team at HyProMag has the know-how for the post-processing as well. So, I think,
but that's the technology that you've got. We've had people like Neometals, an Australian company who also listing a name later this year. You've got a HydroMet process too. So the technology itself is not necessarily entirely proprietary, so it comes down to being able to get contracts, being able to make margin.
It is the hydrogen, the use of hydrogen for process. And this is as opposed to, dissolving everything in acid or heating it up and extracting the magnet that way. The use of hydrogen for extracting magnets from end-of-life components is patented, and so HyProMag has an exclusive license for that technology. The difference is, for the hydrogen process and that process, the energy impact, I think, is 88% less energy used to recycle. For making those end-of-life magnets, those recycled magnets,
88% less than
a conventional process to go from mining, processing, metal making, alloy making magnets. Yeah.
Gotcha.
So and anything, that's the. And then if you're using chemicals, clearly or heat, you're going to use more energy, more reagents to do that. So the way I see it is, so I don't think. I think what HyProMag and that technology does, it really unlocks the supply chain and enables, low energy liberation of that magnet. Now, what happens to that powder? What HyProMag are focused on is the short-lived magnet recycling. You remake a magnet, 88% less energy. I think what other groups are looking at, the chemical processing, is they take that material and they're chemically processing it. But it's still just having the chemical process doesn't address the issue of how to get the magnet out.
Okay.
So, and that's what it does. Yeah, unlocks it.
Right. Okay. Again, so like I said, we've had people like I'm going to reference Neometals again, but they've got a flow sheet which they've partnered up with automotive companies in Europe to extract rare earths and battery metals, etc. And to some extent, whatever technology they're using or you're using doesn't really matter to the automotive companies. They just need to be able to say it's green, it's efficient, and assuming everyone along the chain wants to take a little slice of the upside there, that the economics are there for everyone in that food chain. So at some point it comes down to marketing and the story that you're telling, because your technology needs to sound better to their customers, automotive customers, than the next guys. So pyrometallurgy may suffer somewhat in comparison to you, but there will be other technologies which are as green. They may not be quite as efficient, or maybe they are, but you're going to need to help them tell that story to make sure that you're front of the line versus the next guy. Otherwise, it is a very competitive environment, isn't it?
Yeah, I would argue that this would be the greenest technology to extract a magnet from embedded in a component. I think, it is, and it's a technology that's used in magnet making, but it's the application of that technology to recycling is where the IP and know-how sits. So I think HyProMag would certainly compete on the sort of energy, the carbon impact and the energy usage.
Right. So now what you guys you and your partner are going to need to do is find that feedstock, the quantity, the volume to deliver the scale and consistently, and who knows what happens to margin along the way. But let's assume it's a competitive environment and you are front of the line. How do you get those contracts signed up? So you're testing this with people at the moment. But we're in part. We are in partnership with various recycling groups and users, Bentley Motors, Unipart, and as part of the SUSMAG Pro project, which is a very large EU-funded project, which this technology effectively underpins. There's a number of partners within that consortium, potential end users. So I think the strategy at the moment is really, as I say, samples to customers to demonstrate
that, this is a magnet that can be used. It's a recycled magnet. As I say, we have had a lot of interest in that. And then it's scaling up the production process. So we are getting a huge amount of support from the UK government on a number of projects, Innovate UK. And University of Birmingham has also received a lot of funding to install this recycling equipment. And that'll go into Tyseley Energy Park just outside Birmingham. And that'll be where the technology is scaled up. HyProMag with the know-how will manage that process. So it's really a question of getting the product out there and starting at a fairly modest scale. But I think growing with the market, and we're seeking to accelerate that growth as much as possible. And if we can do it quicker, and if the market's there, which we believe it will be, then we'll do it.
Okay. Timing's everything. Do you think, if you look back at the Songwe deal with Talaxis, you're going to walk away with 25%, but 25% free carry. They seem to have taken a lot of the upside there. Was that just a question of timing in the marketplace, or do you think there's scope to kind of maybe look at other projects as well outside of the Malawi project, for the sake of your shareholders, for the sake of Mkango shareholders?
I think that was we signed that. We announced that transaction in November 2017, and look, it was fantastic transaction for the company, and it enabled us to accelerate and really complete the detailed work that's required for a rare earth project with a very supportive partner. So it was certainly the right sort of the right transaction. And in terms of other projects, we have extensive exploration portfolio in Malawi. There's actually a lot of interest in Malawi in the mining sector at the moment, and that's really, apart from rare earths, there's a recent rutile discovery, and Sovereign Metals has recently announced a very large rutile resource in Malawi, and we have the license immediately to the west of that project, of that license, and we're in an earlier stage, and I say we barely scratched the surface. There's more work to do on it. We're processing the results. We have found rutile, and I think that could be very interesting for the company, and very interesting for Malawi actually, because there's infrastructure there, and there's a lot of interest, I think. And a lot of benefit that could come out of that opportunity and those opportunities in Malawi. It's a district scale sort of opportunity. So that's exploration in Malawi. We also, in terms of separation plants, phase one for that plant, at the moment we're looking at just processing material from Songwe. And that'll be a purified mixed rare earth carbonate. In the future, we may look at processing third-party carbonate, and there may be opportunities to participate in other rare earth projects to secure that material. But initially, we're just starting at sort of phase one scale, 2,000 tons per year NdPr oxide. But if we were to expand that plant, it's extremely cost competitive at the moment. That cost position would improve even further. So that's an opportunity, but we don't want to take on anyone else's development risk to secure that product. So we would be looking for stable sources of mixed rare earth carbonate to underpin that. And also, you don't want to be, producing at such a scale that there isn't a market for it.
Okay, that's interesting.
And our strategy is to, market as much as possible into Europe, but we're also looking at Asia, and we're also very closely looking at the US as well. I mean, we took on a US strategy advisor just recently to assist with that strategy.
Great. That's really interesting. So you're thinking where your future lies is a little bit more downstream. You're not necessarily going to go out and take development risk, whether it be outside of Songwe in Malawi, not necessarily, but you think that the plant is perhaps where the future is, and of course recycling, if you can insert yourself into the marketplace.
I think if there was a situation with another rare earths project where we could leverage the experience that we've built up over the last 10 years, then I think we'd take a look at it. I mean, it's a geologist at heart, so it's always interesting to look at new projects, and rare earth sector is a sector we've been focused on. So yeah, we would certainly look at new projects, but in reality it would need to be better, or there need to be synergies with what we're doing at the moment.
Is that because you're slightly scarred by the again, come back to timing? You've been through quite a difficult time in rare earths and getting funding in place, getting anyone to pay any attention, quite frankly. Do you think there's a little bit of scarring from there, or is it genuinely you've recognized that sort of downstream is where the margin could be made if you can nail this technology?
I think the mining side, it underpins everything. I think building a separation plant on its own without the mine, underpinned by a mine, I don't think, that's not something we'd look at. So it comes together. So, and I think, in the rare earth sector, it's seen, and we've been through a down cycle, so we know what happens. And, we've seen what happens to rare earth prices at the bottom of the cycle, and we can see the potential as well. It's more a question of, to get involved, in an early stage project, unless if it was very similar to what we're seeing at Songwe, then we could certainly leverage some of the expertise and know-how that we've built up over the last 10 years. Because I mean, every rare earth project is slightly different. Every as far as I can see, everyone requires slightly different sort of flow sheet. So there are certainly, and we've developed, as I say, we've had 3 PhDs. Huge amount of work has gone into the project, understanding the geology of this type of deposit, and bearing in mind that a lot of other rare earth projects that are in production, or maybe go into production, they tend to sort of feature, or they may feature a sort of thick weathered, sort of very weathered cap, and which requires certain type of processing. And then you go into primary fresh mineralization, which would require a different processing flow sheet, most likely. Now, what we're looking at Songwe is, because most of the weathered material has all been eroded away, what you're left with is that fresh material. So we have, built up a lot of experience in the processing and geology of that type of ore body. And what it also means is what we see, close to the surface is what you see at 300 meters, 350 meters. So that's, it implies a lot of exploration upside to depth. And laterally, we, during one of the research projects that we were looking on, we identified a really interesting looking geophysical target to the east. So we're hoping to incorporate, maybe some targeting of that during our geotechnical drilling if we can do that.
Brilliant. Okay. Look, well, thanks for the catch up and the run through. It's been interesting to see how you're coming at it, and obviously how the project is evolving. Stay in touch and keep us up to date when there's news. We'd love to hear from you. So appreciate your time today.
Thanks, Matthew. Much appreciated. Good to talk.